Pandemic has certainly caused a change in many people's spending habits for the sheer fact that we are sitting at home, not perhaps buying as much coffee or food at lunchtime, what have you. Let's get some ideas in terms of what might stay the same and what might change in 2021. For that, Bruce Sellery is joining us. He's the personal finance expert and also the author of Moolala. Bruce, great to be with you today. When we think about all the changes, perhaps, let's think about the future too. How will people spend in the future given what we're doing today?
The number one thing is the digital revolution. It is here. I mean, we've been talking about it's coming. It's here. And the technology was already well on its way. It was the consumer that hadn't really converted into this view that their financial life was really going to be entirely digital. We've had to, because we can't go to the branch because the branch is closed. So the consumer is here. The technology is ready, in particular on artificial intelligence. So TD said that it has ramped up its digital product offering by 2 years. Like, they pulled it forward by 2 years. That is huge. And the power of this predictive technology is kind of mind-boggling. Like, they can see when your balances will be low. They can see when you're not saving enough for retirement. And they're going to provide these nudges to alter your behavior. Remember, the banks, they kind of make money no matter what we do. If we don't pay off our credit cards, they make money. If we do and we save lots of money, they make money. And so what you've seen in the marketplace is from the big banks, TD's got Goals Assist. Scotia has Bank Your Way for seniors. RBC has My Advisor. There's just tons going on from the big banks to say we're going to be a part of this digital revolution.
And what about the fintech companies? What are they working on these days?
A ton, and I am very hopeful because this is the competitive offset to what the big banks have been doing. There's a big player that's got a lot of buzz, even just in the last couple of weeks, called Neo Financial. It's raised $25 million, and it says, listen, we haven't seen a major competitor, a major disruptor in the space since ING Direct. That was a long time ago, and now, of course, it's owned by Scotia in the form of Tangerine. So they're going to have, accounts and all sorts of things that you can access on your smartphone at what they say are higher interest rates and lower fees. Now, here's a couple other examples. Marble Financial. I hadn't even heard of this company until they pitched me on their new product to allow people in consumer proposal to be bought out of that proposal at a significant interest rate, but so that they could get into credit health quicker. Borrowell's got this $75 cash advance and an advanced bill notification system. And Wealthsimple's made quite a splash in the robo-advisor space, but they've got a beta test for a cash product that would allow two friends to trade money in a way that isn't e-transfer. And that's just like a drop in the bucket in terms of the amount of innovation that is going on in the Canadian fintech space.
What's wrong with e-transfer? I'm slow. Yeah. I'm slow to everything. I'm slow to everything that's technology-wise, and everybody knows that. I think knows me. And I've just gotten onto e-transfer. Is there a problem with it? What?
There is nothing wrong. It's just a little dated. I mean, e-transfers have been here for a while. There is a cost, depending on how you do it. There's a cost. And so I think there will be lots of innovation that makes that simpler and easier to do. Another one, well, here I'm going to tell you something you probably didn't know. Do you know installment plans have made a comeback happen? When you shop online, it used to be that you could have an installment plan for a fridge or a dishwasher. Now you can do it for a pair of shoes, because there are a bunch of installment companies that are really making a splash, in particular with online commerce. So Afterpay, PayBright, Sezzle. When you go to check out, instead of putting it on your credit card, you can put an installment plan in there. And the base is low. These aren't huge in terms of market share, but they are growing leaps and bounds, in part because of higher awareness, in part because the retailers are pushing them because they know that people who are on an installment plan exit with a larger shopping basket. There's so many new entrants, and I bet the big banks are going to get into the game. CIBC has this PaySit product, which is kind of in that world. There's going to be more. PayBright, Canadian company, just bought by an American player called Affirm for $200 million. So you're going to hear a lot more about those installment plans.
You know what? This might surprise you, but I actually have started to see more of these installment payment companies. Yes. But I think it's because they're advertising so much. But I have to tell you, Bruce, it makes me a little bit, like, in some ways it's great because you can plan for a nice purchase, right? But at the same time, it makes me a little bit concerned because, to your point, you end up with a bigger shopping bag.
Yeah, and I interviewed the CEO of PayBright. I've been covering these companies for a while, and sure, on the one hand, it's a better option than putting something in your credit card because it's the retailers are paying the cost of the loan effectively instead of you paying 25% on your credit card. But I don't want spending to be any easier. I want spending to be very, very hard, very, very difficult. I want you to have to trudge 9 miles in the snow wearing shoe boxes on your feet in order to buy anything, and make savings super easy, a walk in the park, a trip to Club Med. But that is not how the way things are going to go. Now, I want to finish with two things. Well, I'll finish. Two things on the pandemic. One is I think how we spend has really changed. Certainly, we're not going back. Cashless society is here. It's so rare for you to be pulling a loonie, a toonie, or a bill out of your wallet these days. But what hasn't been ingrained is how much we spend. And there's some good news. Hopefully, when the lockdown's lifted, we'll go back to the performing arts and we'll go back to the restaurants and we'll do all those sorts of things. We'll shop in those small businesses that are so desperate for our revenue. But what I'm concerned about is that much of our spending will return to historic levels in a way that doesn't serve our financial health. Because so many Canadians just live beyond our means because there is so much temptation out there. So we're going to have to really be on it, automate our savings, so that when those floodgates open, sure, have a great time, go to see a concert, go have a meal out, but don't live beyond your means, even once things open up again and you've got more freedom to go out and spend.
All right, Bruce, we'll leave it there. Great to see you. Love the background, too. It's fun to see. Celebratory. Yeah, looks great. Thank you. Thanks for being with us. Hopefully, maybe we'll even see you next week. All right, that is Bruce Sellery, personal finance expert and also the author of Moolala.